Good morning, everyone. I hope the sound is fine. So yeah, just to introduce myself briefly. So I'm Didier Becklin. I am today at Zopa. I'm the Chief Innovation Officer. I've been at Zopa for over 5 years now, 5 years and a half. By training, I'm a computer scientist and applied statistician. Prior to Zopa, I worked at companies like Amazon and Skype. So I'm just going to, walk you through quickly some of the history of Zopa, why we applied for the bank, because for those who don't know, Zopa, as has been mentioned, started in 2005 and kind of invented the whole concept of peer-to-peer lending, that would be rebranded in marketplace lending afterwards. In December 2018, actually, we got our bank license. So we were the very first marketplace lender in the world actually managed to get a new bank license. There are a few folks in the US trying to do that, but we were the first to do it. So there's lots of numbers on this sheet, but I think the one thing for you to kind of remember, or the few ones that I would want to attract your attention on, is one that although Zopa has been on for quite a long time, we are today one of the largest consumer lenders in the UK. So to date, we've lent more than £4 billion. On an average year, I would say today we lend over £1 billion to UK consumers. So already, a big player in the field. Today, we manage about £1.5 billion through peer-to-peer lending, and half of that would be from retail investors, and half of that would be through institutional investors. We're also the first marketplace lender in the UK to be fully authorized by the FCA, and we are also the first major platform to launch the first innovative finance ISA. So we've been, I think throughout the years, we've often been the first ones out of the gate. You also can see that we've won numerous awards. So we are pretty much on a yearly basis winning, most trusted marketplace lending platform, best loan provider by numerous people. And that's something that we are incredibly proud of, and we believe that sets us really well for the next stage of our evolution as we go through this banking transformation in a way, or evolution. So how did we achieve this? How did we achieve this success? At the end of the day, Zopa was created, back in 2005 because its founders genuinely felt that customers deserved a better deal, right? Most financial providers at the time were really not customer-centric, and the founders of Zopa at the time really felt that there should be a better way to do finance. So that's something that we always relentlessly focus on, is ensuring that we deliver great customer outcomes. And the first one there you might see is around our Net Promoter Score. So the industry's Net Promoter Score is around 4. I mean, that's incredibly low, actually. And I guess this is why we have conferences such as today, as we try to bring more innovation within incumbent banks to try and improve the experience of customers. As a comparison, our Net Promoter Score is around 75, which is much more aligned with what you would see with the likes of Amazon, for instance, or Apple. So very much aligned with what you would see from a tech company and not from a traditional financial provider. When you think about most incumbents, oftentimes new customers are prioritized over existing customers. So kind of loyalty is being punished most of the time in banking, right? It's like you have this great offer as you start as a new customer, and as time passes, whether that's the rate or the benefits that you have from the product kind of dwindles. And that's something which we've always steered away very strongly. So all other things being equal, we want to treat both new and existing customers the same. And when we have to really make hard decisions, then we will actually prioritize existing customers. So for instance, a couple of years ago when we had lots of money actually coming to our platform from lenders, we decided not to take any new lenders on board, and we said we want to prioritize our existing customers. They've been helping us for the last 10 years. We want to do the right thing for them. So that's something which we genuinely believe in, and all the products that we are going to launch in the future, again, will be very focused on ensuring that we treat both existing and new customer in a great way. Again, in banking, I often see in presentation, somewhere would say, oh, more opportunity for front and back book pricing, which kind of always makes me, nearly cry, because, at the end, that's why customers do not trust, financial providers, right? Because they know they're going to get a great deal at the beginning, and afterwards, 12 or 24 months down the road, it's not quite the same. So that's kind of what we call at times this kind of win-lose banking, which is really something that we are very much against. So we do not want to launch, for instance, products that have very long teasers. If you think about balance transfer cards, yes, they are good for customers who are, always paying on time and thinking about, repaying their balances in full, but the product only works because some people forget, right? That's something which we do not feel right about. We do not want to launch products where they only work when some customers forget about the things that they should do, such as repaying their balance before the teaser rate expires. And when you look at the statistics, 40 or 50% of customers will forget that their balance transfer offer has expired. That's why the product is being offered in the market today. Finally, there's a lot of issues as well from customers, and something that erodes their trust as well is around some of the complex features or the jargons that's being used most of the time. I mean, obviously everybody remembers PPI, but more recently you have issues such as this repayment options plan. And I don't want to pick on people, but if you had read the T's and C's of the repayment option plan, I mean, I read it in full, and I just couldn't understand what the benefits were. So if I didn't understand, how could a customer understand? So that's something where time and time again, we are always going to prioritize simplicity, actually at times over our P&L, because we believe that it's the only way to build a sustainable franchise within the financial services space. And so we've been always very focused on delivering these great customer outcomes, but what's the kind of secret sauce behind that? And we believe they are kind of twofold. One is about this great risk practice that we had, because we've been operating actually throughout the cycle. I mean, oftentimes there are talks of, these marketplace lenders, they've not seen a cycle. We actually have seen a cycle. We have the data of what happens when you look at the customers in 2006, 2007. Everything looks pretty good, and then just a couple of years later you realize that the actual default rate that you observe are higher than what you were expecting. So what you can see there on the chart on the left is that we've been delivering strong returns actually throughout the cycle. Obviously, the base rate decrease and the overall interest rate environment has meant that some of the overall yield that we've delivered has been slightly lower than what you would have seen back in the '08 days. But broadly, we've been able to generate these very, very strong returns throughout the time. And again, that was one of those pillars as well that we believed in launching the bank, is that we've got this strong risk practice, something that we believe will carry on to the next stage as we launch new products that are where lending is one of the core capabilities that is required. So one of the ingredients in that secret sauce is the risk analytics and the risk practice. The other side is technology, right? Because that's something that we've believed very much from the get-go. So back in 2005, again, maybe not something that everybody knows, but Zopa was one of the first ones as well to build all of its platform from the ground up. Right, so we didn't purchase at the time an off-the-shelf platform from one of the big vendors. Zopa decided to hire its own software developers and go ahead and build its own technology platform. Obviously, over time, over the last 10 years, that's evolved massively, where today, for instance, a lot of our services are, for instance, hosted in Amazon Web Services, running on what's called as Kubernetes, embedded in Docker. So that's maybe for the more technical of you, but that allows us to deploy our services very rapidly. And if there's any issues, for instance, we can roll them back very quickly as well. That allows us to be more elastic as well. Obviously, the demand from customers around midnight typically is much lower than what you would see around 6 or 7 p.m., for instance. So that's something where today we can take advantage of the cloud to always deliver, a very good experience, no matter what the scale is, on the website. Also, the fact that we use this microservice architecture means that we can reuse some of the components that we've built. For instance, when you think about KYC and AML checks, the way we do it for our peer-to-peer investment flow or customer onboarding for unsecured personal loan or credit card, etc., we reuse as much as possible the services that we have built. And that allows us to launch our products faster. That allows us as well to ensure that we've got a very strong homogeneity in the way we look at the customer. So that's often something that I see in incumbent banks, where the customer experience that you have taking one product can be pretty good, you could argue, but then you take another product and suddenly you have to re-enter all your details again and go through a brand new process. And that's because the systems are not linked well with each other. So that's something where we genuinely believe that we've built the right technology stack, so to speak, so that we can continue to innovate, build better products, and continue to evolve as the customer experience demands change, right? Because today, customers, the expectations of customers are being set by Netflix, Amazon, Google. People are not looking at the traditional incumbent banks setting the bar, right? People are looking at, hey, ordering something from Amazon is incredibly easy and fast. Why is my bank not doing the same? So that's something that, being in control of our own system, we are allowed to create the customer experience that we want today, but we are also able to evolve it over time as the needs and wants of customers evolve. So as I said, we got our bank license late in 2018, December 2018. And so we are in this phase of authorization with restriction. But over the next few months, you will see us launch a lot of new products, actually. Because historically, and for about 13 years, we were focused on this unsecured personal loans and P2P investment. And that was kind of our bread and butter, something that we were doing very well, lending £1 billion, as I said, and generating very strong returns. But as we managed to obtain our banking license, that allows us to offer many more products. One of them, obviously, is deposits, right? Savings accounts. That's something where often our investors were telling us, I really like you for the peer-to-peer investment that you provide, but I wish you also gave us access to savings accounts that are protected by the FSCS. Because in the customer's mind, oftentimes they have a bucket for their stock, for their bonds, for their cash, and their peer-to-peer investment, and they are seeing them in slightly different ways. So that's something where we were definitely listening to our customers, and they said, if only you launched a savings account, I would really commit a lot of money to you. And from all the surveys we've done, we've seen a lot of interest for savings product, where obviously, just like we've done in our unsecured personal loan and P2P investment, we'll intend to deliver very, very strong value. So when you think about a savings account that we will launch, typically that will be around something like 2%. When you think about the majority of incumbent banks, you would earn between 0 and 0.5%. So much higher level of rates for our customers. Credit card is another market that's interesting for us, especially in what we call the credit builder segment. Today, it's a market that's not overly competed. That's actually some of the findings from some of the FCA report, but there's very few players in that market. And that's a market that we believe we can execute it well in, thanks to both our risk analytics capabilities, but also our technology. And having our own platform, we believe there will be very important to build the right features for customers that will allow them to kind of have more control over the way they use credit cards. Because often if you speak to people who are in that credit builder segment, they will tell you, oh, I got a credit card a few years ago and I kind of lost control. I built up this big balance and then I couldn't understand how to pay it back. And that's something that we are very much looking forward to bring, fresh air of some innovation in that market and compete with some of the guys that are playing there, using, again, the fact that we are very customer-centric, or risk analytics and technology capabilities. Car finance is one of those interesting markets as well. We've been active there for a few months now. Again, we believe that there is the possibility there to offer customers a better deal. Again, if you have read some of the papers over the last few months, you might have seen issues around mis-selling or customers not always understanding the finance that they were getting when they were buying their cars. Actually, if you go to a car dealer today, most of the time they will sell you a monthly payment. This is a £199 car, this is a £399 car, and that's the way they are sold. It's not a 15 grand car, it's a £399 car. And very often, customers do not feel like they've had the right level of transparency around the fees that are being charged, or the different offers that they could have gotten, and maybe a better price. So that's something that we are very excited about as well, bringing more customer centricity to the car finance market. Finally, we are going to launch as well what we call a personal finance management app, obviously on top of the open banking APIs that exist today, where we want to help customers understand better their finances. So giving them a holistic view of their finances, but afterwards giving them nuggets of insights, because finance is complicated for people, right? They don't want to talk about it most of the time. So you need to distill them the right insights so that they understand what they can do about it, whether that's to save better, whether that's repaying their debts faster. That's something that, again, we are very excited about over the next few months. Obviously, we need to see more improvement within the open banking infrastructure, because that's something that just launched just about 12 months ago, and we see that banks have done a decent job, I would say, providing the right data, but I think there is still a lot of work to do there to make sure that the experience of customers as they go through some of those open banking flows is really good. So touching on open banking and the love affair thus far, so we've been astonished actually about the response from our customers. We were the very first ones, actually, I think, or one of the very first ones in the UK. I think it was 2 or 3 days after the Open Banking Initiative launched back in January 2018 to launch a income verification use case where some of our borrowers, for instance, when they go through our unsecured personal loan journey, they need to verify their income so that we ensure that they've got the right affordability. And for those where we can't verify that automatically, we ask them to connect their accounts. And what we saw is over 50% of people using this feature, which is something that even we were astonished by. Because in a lot of user sessions that we did, if you ask customers, okay, when is the last time you've done this? They've never done it. They are going to tell you that they are worried about sharing their data with a third party. But what we saw is that when there is a very clear gain for the customer, i.e. reducing friction, ensuring that they can get a very fast decision, people are willing to share their banking data with you. So that's something that we've been very positively surprised, I would say. And as the open banking initiative becomes more and more mature, we believe that those numbers will actually pick up over time. So that's something that, again, we are very excited about, seeing the first few use cases that we've had. But again, the future, I think, is very interesting. This relies a lot on the account aggregation feature or account information services. When we are going to look into payment initiation, I think that's going to be the next interesting wave on the open banking front, where you'd be able to connect your accounts, let's say with Zopa. We can see that you have some money that's earning 0% in one of your incumbent bank's account. And then just in a few clicks, you would be able to send that money onto a Zopa savings where you could earn anywhere between 1.5% and 2.5%. Right, so as I said, that's around our mobile app initiative, and as I said, finance is complicated for people. So this is something where we really want to work in collaboration with our customers. So that's something where we're actively working on today with our customers to understand what are the insights that are most interesting to them that they can do something about. Because at times, obviously, you could say, oh, earning more money would be better, from an affordability standpoint, but that's just something that's very hard for someone to do. But understanding, okay, when you are reaching, a high level of utilization on your credit card, that's going to reflect badly on your credit score. So this is something that you might want to look into. Or as I said, if we see that some customers have some money that's parked somewhere not earning something, again, that's something that we can give them some information about how much more interest they could earn if they were to pick up a Zopa savings account. So that's something that, maybe that's a bit small for those at the back, but our objective will be to provide a holistic view of the customer, not only about their Zopa products, but also about the products that they have with other financial providers. Because we believe that in the future, you will see some sort of a symbiotic relationship at times between people providing current accounts, people such as ourselves providing mostly lending products. And you could see that that ecosystem working well in combination with each other. Because despite the new entrants, we have not necessarily seen that the rate of switching has changed massively. I was looking at some of the current account switching metrics, and I haven't seen those metrics really going off the roof. So instead, our belief is that by providing this very easy experience for people to connect their accounts, and on top of those, give them insights that they can action, we believe that that's a great way for us to start earning more and more of that customer's trust. As we launch a lot of our new products. So yeah, that really is the conclusion. As I said, for us, the next phase is launching these products in partnership with all of our customers, being able to offer them great value throughout their life cycle, whether they are just starting at work and offering them a credit card with a fair rate, afterwards an unsecured personal loan so that they can finance, for instance, the renovation of their homes, all the way to offering them great savings and P2P investment product. We want to be there for the customer throughout their life, and for each of those products, always providing them great value. Because as I said earlier, what we've seen often is that customers have a great experience or maybe a great incentive around one specific product, for instance, this balance transfer card, only to see that the other products that the bank is offering them actually are not as good. So that's something where we want to be able to recommend each of our products on the similar ground of having that great value, something that doesn't have any catches, something that's very easy for customers to understand. And whenever they have any issues, then they can call our customer service and they know that they are going to get a great experience there as well. Thank you.